Welcome to Breaking Banks.
All right. Well, I'm glad to welcome back to the show Greg Palmer, VP of Finovate and host of the Finovate podcast here on Provoke.fm. And later on, we're going to bring a couple of guests on, Steve Frook and Janice from Horizn, who are presenting at Finovate Fall this year. Greg, you've got Finovate Fall coming up in just a couple of weeks here, but a little bit different this year, huh?
Yeah, well, I think that's an understatement. Just like everything else so far in 2020, it's not quite business as usual, I suppose you could say. But
Right.
No, we've got Finovate Fall Digital coming up. So instead of being there in Midtown Manhattan, we'll be coming to people right in their homes, home offices, whatever the case may be. Like so many other events this year, we're trying to find a solution that really allows us to press on, but obviously pretty different circumstances, pretty different from what we would see in a normal year.
Yeah. Well, talk about how you have adapted to 2020 for this Finovate Fall. Normally, this would be taking place in New York in a big ballroom somewhere with a couple of thousand people. What's it going to look like this year?
Yeah, well, I think there are going to be a couple people who will miss that trip to Midtown Manhattan and jostling on the subway and things like that. I don't necessarily know what percentage of our
Yeah,
audience that's going to be.
I missed
But
that. Yeah.
it is the hustle and bustle, and it feels really fun to be there, be a part of it. But what we've really done this year is we've decided to build Finovate Fall Digital around the concrete value that we think Finovate has always brought to the space. And we look at our role in fintech from a business standpoint of being relatively simple. We want to connect people in fintech to each other. We want to make it easy to see new innovations, exciting new technologies that come out. And we want to make it easy for people to hear new ideas and get some key takeaways that can help guide them as they go back to their day jobs. And so we really built Finovate Fall Digital experience with those three goals in mind. There are going to be elements of the in-person conference, the happy hour, those kind of more festive aspects to it that are going to be really difficult to replace. But if we are able to keep the business side moving, I think we'll feel really, really proud of ourselves, because there is a lot of value that comes from coming to a show like Finovate, and a lot of key business reasons that people come and attend and keep coming back. And if we can keep those pieces going, kind of keep that serious side of it going, then that's a job well done from our standpoint.
Well, that is an important part. I think it's pretty well known around these parts. I'm a big Finovate fan. I was an early Finovate adopter, been to many, many of the shows in many locations. And I definitely do miss that social part of that. I mean, I've met so many friends, people I knew, online only, that I met for the first time at Finovate. Actually, Jason and I, my business partner, met at a Finovate many years ago. He was in the audience, and we connected and ended up working together a few years later, and ever since. So that is a difficult part. How are you going to try to address that?
So what we've done is we've kind of looked at the digital experience, and we started with what I hope anybody would do in this situation, which is just trying to collect as much data as we can. And we looked at attendee surveys, we looked at other digital events and what people were saying about them. And we decided a couple of key things. The first was we wanted to keep each day shorter. We wanted to make it less of an ask. Obviously, at a regular Finovate event, it's a full day, 8 a.m. to 6 p.m. And we pack a lot into those days. But we felt like we couldn't really do that on a digital side. We had to make it a little bit easier for people, be conscious of the fact that people probably aren't going to be wanting to sit in front of their computer screen staring at it all day. So we've shortened each day. We've spread the content out over a full week now because we have a lot more flexibility. And by doing that, I think we've got really manageable sections that should be very easy to attend. They shouldn't be something which takes up and pulls people away from other work that they have to do, but you can come in and see the sessions. Obviously, all of the sessions will be aired live, but we also, with the digital event, we have some flexibility in terms of when people can view the session. So while we'll be airing them live, people will have access to all of that content for a full week after the event. So if there's something you missed during the event, it's not your only chance. You can come back and see it again. And one of the really cool things about that is that now you actually have a lot more content at Finovate that you can watch. We've always divided into different tracks during the days. And so you kind of split the audience into 4 parts. Now, for the first time, it's possible to watch all 4 of those tracks because normally they would go concurrently.
Right.
Now you can watch them on your own time. So by doing that, I think we've just given people a lot of options, a lot of different ways to take in the content, a lot of different types of content for people to look at. And so, the networking piece is live. There are going to be key moments where we're going to be trying to get everybody to come into the networking side of things. But from actually seeing the content standpoint, there's a lot more that we can do now. And that's the other way that we've looked at this. We've tried to take kind of a glass half full approach. We look at an event and say, okay, we obviously are in a position where we can't do a physical event like we normally would, but what new opportunities can we do? How can we take this and turn it into something that gives us some new abilities, gives our attendees some new experiences? And so that's where we've also spent a lot of time trying to think about, what those could be, what those should be. This is our first crack at it, so obviously we're going to learn a lot, but I'm really pleased with how things are coming together and the way that we've taken what would normally be a very compelling in-person event, moved it online, and I think it's going to be a lot of fun, and there's going to be some, as I said at the beginning, some really important takeaways for everybody who's involved.
Well, that's true. That does give you some more flexibility. And especially as you started to get so much content, you had to break up into the different tracks. And I know I often found myself going, oh, gee, I would like to see this and this. At the same time, I'll have to wait for the recording later. That'll come a lot faster now. Now, how are and I guess we'll hear Steve and Janice, and we'll ask them about this directly in just a few minutes. But from your perspective, I know one of the things you and your team spend a lot of time on is really getting presenters ready for the Finovate stage. How's that kind of prep changed this year?
Well, the biggest difference is obviously how the actual final demo will be delivered to attendees. But a lot of the same best practices that work for an in-person live demo will work really well for a recorded demo. The big difference in terms of format this year is we've given every presenter a little bit more time. They have 10 minutes now instead of 7. And I'm also involved in the demo videos, acting kind of as a host, asking some questions and things like that. So for anybody who has watched demos and said, why isn't Greg doing these before? It's not quite going to be that level. I'm not doing the demos, but I'm there to help and kind of provide guidance for companies as they get up on stage, on the virtual stage, I should say. So that's, I think, the big difference in terms of the structure, but the end result is still very similar. You're going to see live demos of technology. It's working now. We're going to spend the bulk of our time focusing on the new tech solutions that are being demoed. And what the audience will end up seeing is going to be very close, in fact, to the kind of post-show demo videos that we put out after each Finovate event. So, again, the idea really is to put the technology first and foremost, get the audience to see it, give them that understanding what it would look like if they were to engage with it. So the format as really we put together to allow that piece to come through first and foremost. And the ones we've done so far have done a really good job of that. I've been on these calls, on these recordings, getting the demos ready. And I've been really excited to see how the technology itself continues to stand as the most important piece. Because at the end of the day, it's really easy to talk about all of the things that you want to do from a tech standpoint, the products you want to build, but actually having it built in a way that you can show it and demonstrate it to people is a really crucial hurdle. And so we know people come to Finovate to see that. They want products that work. And that's very much where we're keeping the focus as well, on that technology, making sure that it works, making sure that everybody understands the value proposition and kind of what's going on behind it. And so far, it's been, as I said, really fun to watch these demos come together. And it's also fun for me to actually be a part of a lot of them. That's something where I've, on a personal level, spent a lot of time backstage watching demos. And now that I get to be a part of it and feel that energy as well, it's really exciting for me.
Well, I know a lot of our listeners have been to Finovate before, but for those who haven't, it's a couple of the things that really made Finovate, I believe, part of really one of the cornerstones of the fintech movement, and that is very rapid back-to-back 7-minute demos with famously the gong. So if you go too long, you literally get gonged off the stage. And then there was no Q&A. So what I liked about that was after I'd watch 7 or 8 demos in a row, then I would decide, well, of those, here are the 1 or 2 I want to go talk to afterwards, and then you could always tell who really nailed it, because there's a big line at their booth at that point. So as part of the idea of expanding the time, you mentioned that you're going to get involved as Q&A. Is that the idea behind that? Is because I can't go stand in line at their booth now, that you're going to facilitate a couple of the key questions?
Well, so there will be virtual booths for all the presenters. So if you see something that you like, you'll be able to go and connect with the people who gave the technology, you know, the founders. You'll be able to go and ask questions of them. But the kind of reason for Q&A comes from some of the research that we did early on, which suggests that over a long period of time, people like to see content that's more interactive, more conversational. And so, you know from being in the audience what it feels like when you see a huge number of demos kind of wash over you. It's a big ask when you're in person and seeing it live. On a computer screen, I think it's potentially too much of an ask for attendees. And so we wanted to, get the time a little bit longer, add some conversational elements to it, put some back and forth into it, because that tends to keep people engaged. They like to hear those kind of conversations. And in many cases, companies who are up on stage have a good idea of what types of questions audience members are likely to ask when they come to their booth. They've given demos and presentations before, and now we're able to kind of take some of those questions and bring them into the demo, kind of proactively answering anticipated audience questions, which is something that I think is really good. Now, when we go back to live in-person events, we will go back to the 7-minute format. This is kind of an anomaly. This year is a little bit different, but long term, I'm really interested in this idea of kind of a 10-minute demo interview style, because I'm seeing advantages to it. And as we're doing this, I'm realizing there are things that you can do in that format that you can't quite do on an on-stage demo. So, this is another interesting thing for us, is we think about how can we capture that and maybe bring this type of content that we're exploring for Finovate Fall Digital. How can we offer that in a different way, or bring that into part of our normal offerings once we do return to business as usual, when that ever happens. But it's something that we're seeing. There are definitely some really cool elements to it. So, it's just like everybody else. We're learning, we're finding new opportunities, and we may very well come up with some things that will guide us going forward and give us some new opportunities going forward.
Well, most importantly, will people still be able to tweet out snarky things while people are presenting?
I don't think I could control that even if I wanted to, JP. I'm not in charge of that. You can ask anybody how easy it is to control content on Twitter.
Yeah.
But no, of course. Yeah, I mean, we'll be airing them live, and then the way that it'll work, just like always, you'll see a block of demos, and then the companies will all be in their virtual booths after the fact. So as those demos are airing live, absolutely, we'll be expecting to see some good Twitter conversations, what people like, what people don't like. We know who the contributors are from the snark standpoint, and I think they add a really fun element to the show. So I sincerely hope that we see all those types of comments. Now, I always hope that it's constructive in nature and not just pithy, but at the end of the day, it all builds into the Finovate experience, and we want to get as much of that as we can in this digital format.
Well, my unofficial rule was always, if it's snarky, I don't name anybody, and those in the audience can figure out who I was talking about. But if it's complimentary or constructive, I'll call out whoever it was that I was talking about. So
That's
I guess
good rule.
I'm a snarky subtweeter.
Yeah.
Well, one of the companies that's going to be presenting at Finovate Fall is Horizn, and Steve Frook and Janice are here from Horizn. And I want to talk about your experience at Finovate, Finovate's past, and what you're looking forward to coming up here. But maybe first, tell us a little bit about Horizn and what you do, and how busy I know you've been over the last few months.
Yeah, good. That's great. So Horizn is one of the fastest growing fintech companies. We're 100% focused on financial services. We, at our core, help financial institutions dramatically increase the usage of all the bank's digital offerings, digital adoption. We focus on the human side of digitization. And at Horizn, early on, we had this aha moment where we realized we were teaching humans about innovation, how to bank digitally. Whether you were an employer or a customer, you were a human. And it was very important very early on to get people comfortable, two groups of people, get the non-digital users comfortable with digital banking, or in pandemic times, the very new to digital users comfortable, but also making sure that the active digital users were more broadly leveraging the bank's digital capabilities, right? So more complex things that we're launching that required more education, but also just awareness, so that the customer knew that these type of features that the banks had were available to the customer. And then we sort of divided into, I would say, three components. Steve, you want to touch quickly on those three components?
Yeah, absolutely. So as Janice was just saying, the business objective that we are solving for financial institutions globally is getting more of their customer base digital, and then getting more of those digital customers utilizing the capabilities that the bank has to offer. And as Janice said, we have three different components. We have self-serve tools that are really aimed at customers who are looking for the digital answer on their own. So they might be going to a bank's website, they might be doing SEO, they might be looking at marketing information, they might be involved in a chat bot. And what we do with our bank partners from a self-serve standpoint is we literally guide the customer through, the banking customer through step by step exactly how to utilize the digital innovation that the bank has launched. So that's great, of course, for customers who are looking for that self-serve approach. But we also have assisted serve capabilities as well. So for those customers at the bank who might need more of a helping hand, that idea, they can call the call center or they can walk into a branch. And what happens is we have tools that can easily guide the customer through alongside that helping hand. So that call center rep or that in-branch rep, where they can give an extremely high quality digital answer to all of their digital capabilities. So those are sort of our two platforms when we start looking at customers. How do we actually make sure we epically serve them from a digital perspective? And then from a third product standpoint, what we have is we have a product that's focused on the bank employees. And of course, over the last 6 months, the expectations of bank employees to become much more digital has grown substantially. And we've been right alongside the bank, helping them be able to enable their employees to have more digital capabilities than they had before, so that they can, of course, serve their customer.
Well, I wrote a blog post earlier this week, and I said that this pandemic forced some straggling customers to cross the Rubicon and forced themselves into doing some, at least, banking services digitally, where they might have preferred a branch or face-to-face transaction, and it kind of dragged some of the straggling bankers along with them. And so you've mentioned the first two things, kind of the self-serve versus the assist. What kind of percentage are you seeing today, and are you seeing any trend in how that's changing on self-serve versus those that still do want some assistance from the bankers?
Yeah, well, what we found right away was, as COVID hit, there was, an emergency, right? All of a sudden, everyone had to bank digitally. So any way you could get them information became mission critical. So we found ourselves on the bankers putting our digital demos on their homepage and in their emails. Senior executives were emailing them to customers. So it became very focused on how many places on FAQ pages, inside product pages and emails, like all these places to get that immediate user very safe. But as we move forward, we're seeing a lot more with this sort of, how do we help the call center, right? So that when they speak, to a customer, they can send them a digital demo, right? When we head back into branches, what does it look like? And sort of what is the banker of the future, right? So it touches into a whole bunch of bigger conversations that banks need to have digitally, and we see our bank customers having them. So it's a bit of both, really. It's a long-winded answer.
But I'm curious if you're seeing customers leaning towards more self-serve. And I'll tell you part of the reason why I asked, besides just the surface level of the question, which I'm just curious about that trend. But I also know that a lot of bankers struggle with, yes, I know we need to digitize some transactional services, but how do we provide advice and how do we deliver on kind of the promise of our relationship when we're doing so digitally? And I'm just curious what the flip side of that looks like from customer behavior, right? Because I also know sometimes bankers are just so sure that my customers want this advice, and many times the customers don't really want the advice. I know what I want. I just need to go give me this.
So we did see massive increases of the self-serve, without a doubt, right? And we also saw banks push it. If you were having 3-hour wait times in your call center and people were calling for things like, how do I change my password? You want them figuring it out themselves. You want them seeing a demo on how to do it if they don't know how to do it, right? So we saw, I would say that's correct, Steve. Like we saw a tremendous increase in that. I think but you know that customers still need help. So we also saw things like one of our clients, Scotiabank, started to create videos where the banker was talking to the customer about the new features, but the digital demos were running in the background to show them, and they were pushing the customers to there. So I think it's what you're going to see is a mix, right?
Yeah.
And it's,
Yeah, for sure. There's a mix, and I've always said that there's two sure ways to make customers unhappy, and one is to force them to self-service when they really want to talk to somebody, and the
that's
other
right.
way is to force them to talk to somebody when they really want self-service.
Yeah.
And so I think that's a challenge to try to figure that out as early as possible and get them in the right path.
And enable them to do it any way they need to do it, right? Like that's the bottom line, right? Is however they need to bank, they should be able to bank that way.
Yeah, for sure.
Something we've also seen, JP, is the, it really depends on the makeup of the customer base as well. So when you start looking at different demographics or different types of banks, and of course the segments that they serve, we're also seeing, different techniques and different use cases as well. We work with Nationwide Building Society in the UK as an example. And of course, from a member experience, it's extremely important. So it goes to exactly what you're saying. We're not going to push anybody to the digital channel, but we're going to help them. So we're going to send them information. We're going to follow up with them. And maybe we'll actually have a phone call where we have one of their associates actually walk them through and show them step by step how to do it. And what we find is that when you take the time to show somebody how to utilize the digital capability, almost universally it's accepted, because typically what's holding people back is I don't know how to use it. And quite frankly, I feel like everybody else is digital already and I'm a little bit ashamed of it. So when you can actually help somebody and show them, then that makes a huge difference. And what we see is of course a big increase from a digital adoption perspective.
If I could just interject really quickly, I think there's two things that I want to say. First off, and I can't believe it hasn't come up yet. You guys are too humble. Your last time out, Horizn won Best of Show at Finovate Europe. And I think that's important to establish before anything happened with the pandemic. In response to that, you guys already had a platform that was resonating with the Finovate audience. And one of the things that I've always really appreciated about the technology that you guys have, we in FinTech kind of operate under this assumption that what we're doing is important. What we're doing is helpful to people. They just don't know it yet. And there's this idea that if more people understood what FinTech really could offer, what technological solutions could do, that it would become more popular. And I think what Horizn does that, and this is probably an oversimplification, but you make a lot of FinTech solutions accessible, and you make it possible for people to learn about them and really see what options are out there, so that then they can make an informed decision over how best they want to proceed. And so I look at, the Best of Show win that you guys had in Berlin earlier this year, and I look at the progression, the way that I've seen your technology unfold. And to me, that's, I think, one of the biggest pieces is that sort of really gets to this core underlying assumption that digital transformation is a good thing, which I think everybody in FinTech believes. It just cuts right to the heart of this crucial blocker, which is I don't know how to do it. I don't have time to learn how to do it. And I think what you guys have seen, and what I think is so interesting about the story of your last 6 months, is that once you are able to get out in front of people and say, look, here's how you can use this. This is a really easy, accessible way to learn this. You start to see people adopting it. And so this is what you would hope the answer would be in the FinTech industry. People who spend all their time building solutions for end customers, you hope that as they learn more about it, they start to say, yeah, this actually is really great. I want to keep using it. And I think that's what you guys were able to see in this moment, when it was really important for people to be able to do that quickly. So just wanted to chime in with my perspective there.
Thank you. That was lovely. There you go, Steve, your new script.
I actually should mention that I just heard Steve do his demo recording yesterday, literally yesterday. So those talking points are not 100% my own. I'm just, that's what I remember, Steve. So I hope I think that should be a good sign of what people will take away from your demo when they see it in a couple of weeks here.
Well, if no one else, at least Greg heard and absorbed the talking points. So, yeah, what is new? If we're not letting the cat out of the bag here early, but what's new for you, and how's this experience with demoing digitally on Finovate been for you so far?
You want to take that, Steve?
Yeah, absolutely. So one of the reasons we love Finovate, and I had to count, but I believe this is our 8th Finovate that we're attending, is it really forces you to sharpen your messaging to be able to get within the time frame that you're given. And we'll thank Greg for the extra 3 minutes this year. But from a 10-minute standpoint, being able to package your messaging into, hopefully a very consumable component and enable bankers to be able to listen to that and understand what you do is extremely important. So this year was exactly the same as previous events, where we spent some time and of course talked about how we were going to share information. And then, from a fintech company, you rehearse like mad. So we were in the office this week and rehearsing over and over again. And while I'll admit it wasn't exactly the same as standing up in front of 2,000 people and delivering it, there was a bit of excitement when the red light went on and you were live with Greg and you were recording. So that's always fun, and I got to tell you, this year it existed as well. So it was a blast to do, and hopefully it sounds all right when we listen to it.
Well, I'm looking forward to seeing it, and digital transformation has really been one of our core themes on Breaking Banks since we were launched in 2013, but especially over the last few months because of all the things that we've already talked about, right? This global pandemic has forced us to be more digital and digital first in things that we're doing, and for so many bankers, it's just such a massive change. You work with some of the largest financial institutions on the planet. What are you seeing from maybe some of the smaller and mid-sized institutions who are trying, very quickly to kind of catch up in a game that they've been behind in for quite a while?
Steve, why don't you take that?
Yeah, absolutely. So what we see, whether you're the largest financial institution in the world or whether you're a super regional or a community bank, JP, you're bang on. Everyone's got the same objectives with regards to how do we get our customers that aren't digital, and then how do we actually get them utilizing capabilities. From a Horizn standpoint, we started with tier 1 banks and then, of course, had demand coming from tier 2 and then also tier 3 financial institutions. So our platform works extremely well across the board. The way we go about servicing the banks is a little bit different. So recently we forged a partnership with eBankit, and through their relationship with Solero, we're excited to say that we're working with over 26 credit unions in the Canadian market. And the relationship with Solero and eBankit made, of course, that possible. So it really is a solution when we talk about creating digital demos, ensuring that all employees, all customers are digitally aware, fluent, and confident. Our solution works across the board. And as we work with community banks or tier 3 type financial institutions, we'll of course work with those through a number of partnerships that we'll be forging in the near future.
Well, and I think you said something important that, the employees have a role in this too. This isn't just about slapping new technology on your front end and saying, well, this ought to be good, right? The customers can go find this and do what they need to do. It really has to be integrated more deeply with, employee buy-in and behaviors and workflows.
Yeah, absolutely.
Absolutely. And bank employees had a challenging time before the pandemic with the rate of digital innovation. But then, of course, over the last 6 months, the expectations of employees to be more digital, to understand things from a digital standpoint, has just increased significantly as well. So our platform, our frontline platform that's tailored to work with a bank's existing LMS system, is all focused on that, is how do we actually elevate the digital knowledge of employees to ensure that when they do have that, whether it's an ear-to-ear relationship or a hip-to-hip relationship, that they are truly able to deliver an epic digital experience for that customer that they're interacting with.
Yeah. Well, I completely agree with that. So Steve and Janice, thanks for being here. Congratulations on your past win. Good luck this time. And Greg, I'll give you kind of last word here to plug Finovate Fall Digital.
Sure. Well, appreciate that. I mean, I think the big thing that it comes down to is, we've been telling people from stage like yourself that it's time to make sure you are digitally relevant and have plans to, protect against what the future may hold. And now we find ourselves in that same position where we need to kind of take the advice that we've been doling out from stage. And so we look at this not as a short-term thing, not as something where we're going to be, making plans for this year and then reverting back and completely banning them. We plan on continuing to offer digital solutions, a digital means of attending our events and presenting at our events going forward. And so this is really the first step for us and what we hope is a nice long-term change. And as much as possible, we'd like to get as many people in. The more feedback that we get, the better the end result will be. And two things that I'll just say to end with a digital event: there's no travel, no hotels, so it is definitely not too late to book. If you haven't yet, you can log in and register. We have a discount for Breaking Banks listeners. That code is BREAKING20, and it will save you 20% off of your ticket. Also, check out FinovateFall.com. There are a number of specials for different types of attendees. We want to make the show accessible for banking executives and startup founders. So I would encourage you to come to the attendee page there and see what types of offers are available for you. But it's going to be a really exciting event. This is a big deal for us. It's something that we're excited about, and we're using this as an opportunity to push ourselves forward in the way that we hope the rest of the industry moves forward with a challenge like this. So now it's time for us to take some of that advice ourselves, which is, I think it's only fair, really, at the end of the day, and it's something that we're excited about. So yeah, give it a look, and then please do share with us what you think after the event so that we can continue to make it better and continue pushing in the right direction.
All right, Finovate Fall Digital coming up September 14th through 18th at finovate.com. Well, it is the beginning of September, which means the end of the third quarter. We have fourth quarter in sight, and I can't believe we're already thinking about 2021, Jason. This is the start of strategy month for Breaking Banks.
Well, I think everyone is anxiously thinking about 2021 because, let's face it, since about, May, everyone was done with 2020. About the time the murder hornets showed up, right? It was like, I'm done with this year. And then when we got to Fire NATOs, you're like, nope, let's just keep on moving.
Yeah, I think you're right. I think a lot of organizations are happy to think about another year, but this strategic planning season is really like no other. Even in the depths of the financial crisis and coming out of that, at least that was a lot of the known knowns. Yes, they were terrible, but we kind of knew what to do with it. What I'm hearing a lot, and which is why we're focusing on strategy, we're going to have themes running through our shows over the next month around big picture and strategy things. But what I'm hearing is so much confusion because there's so much uncertainty. So I thought today, before we really get going with the deeper content, maybe you and I could just talk a little bit about strategy. What do we even mean by strategy? What is strategy, Jason?
Well, I want to push back first on the idea that there's confusion, because I actually would argue there's not enough confusion, that I worry for as many unknowns as are out there. Some of the conversations you and I are having together and individually, we hear this, we made it. And, let's go back to, I don't know that many folks say business as usual, but there is a sense, hey, we got through PPP, we've managed a bunch of things. We've gotten to work from home. We're pulling forward our digital agenda. We hear that one again and again, where it's all those projects that we knew we should have done before, we're actually now doing them. If we were to stop, and I had just finished this series on Michael Porter's 5 Forces, right, which I was fortunate to work for Michael Porter. For those who don't know him, he is regarded as the godfather of strategy. And have been doing a lot of thinking, using the time in the summer and some of the quarantine time to think about that. What is strategy? And if, especially the, call it outside of the top 10 banks and, the top tier of the credit unions, and even I would say the majority of a lot, fintechs, when they think about their long game, strategy is how do we choose what game are we playing and how are we going to win? Right? That's how he boils it down in a nutshell. And I don't know that enough financial institutions are stopping and thinking enough about, has the game changed and how do I need to change with it?
Yeah, I think that's a really good point. And I think that's so endemic in human nature that we don't want to think about the game changing. I actually recorded a segment yesterday with Matteo Rizzi. It'll air in a couple of weeks, and I won't repeat everything we said there. But one of the things that I said is we were talking about risk taking and culture, right? That's a piece of strategy, a culture and risk taking. And I said that I think a lot of leaders conflate risk with familiarity. And so human nature wants us to drive us back to the things that we already know, whether we're doing very well in them or not. Familiarity feels safer and it feels less risky, and it probably feels like we need, no kind of new strategy for that, because since we already know, well, what we were doing before was pretty good, so we can just keep doing that, right?
Well, except so one of the other things in my catching up on reading, read a great article in MIT Sloan's management review called How Leaders Delude Themselves About Disruption. And They talk about 4 lies that leaders tell themselves. And the number one is they believe that their biggest and most profitable customers are the best source of information. And I would say broadly, forget our biggest and most profitable. Within the incumbents, regardless of what kind of financial service you provide, we tend to look at those customers that we have today versus where those customers are going, and where, I hate overusing the Wayne Gretzky, but where the puck is going and skating to that. One of the things that has become clear over the pandemic and the shift to digital is some of the challenger banks, that it's easy to poo-poo, and, Ron and I love to snark about some of them, but they're now here to stay. They've reached a level of scale that I think, given what they've built and their advantages in the cost structure, because they've built it from scratch, I don't think they're going away. I'm not sure that they're worth the unicorn valuations they have, and I'm not sure what the exit strategy is, but I'm pretty confident Chime is not going away at this point, given their cost structure and what they're delivering. I think there's a real business there, and there's some others like that. Now, at the same time, we talk about there are some of the challenger banks that are running out of money and haven't built a real business model and are unit economic negative, and I think they are going to go away. So they do need to rethink their strategy. But before any of the incumbents say, we made it, I think they need to look at the fact, well, wait a second, even if it isn't a full account getting moved over, these challenger banks are, taking millions of customers, or at least using them for part of their financial relationship. And the same can be said if you look at Amazon's lending and Square's lending and the growth within Venmo for payments. This business is starting to get picked apart. And I think what banks are going to find is their biggest and most profitable customers, are going to be started to be bled away without them realizing it.
Well, and I saw that article when you sent it too. And one of the things that I thought was interesting is Scott Anthony from InnoSight, and he talked about, that's the classic Kodak story, right? Their customers were not unhappy, buyers of celluloid film and coated papers. In talking to your existing customers doesn't really tell you what's happening on the outside. And when you talk about the Chimes and some of the neobanks of the world, it does take me back to Porter and kind of some of his initial work, where he talks about, the 2 kind of basic levers of strategy is cost and value. And can you do the same thing for less, or can you provide greater value at the same cost? Is it as simple as that for the neobanks, or is there something really different going on there that incumbents aren't seeing?
Well, you need to add the other axes to that. So one of Porter's other earlier works is he called it the generic strategies. And he said on the x-axis, we can talk about, are you competing on cost, or are you competing on differentiation? Mm-hmm. And then he said on the y-axis, let's look at, are you competing on a narrow or a broad scope? And the problem, if you were to plot, the majority of banks are both competing on what they think is differentiation. I'll circle back to that in a second. And they're doing it broadly. How often do you go to a bank or credit union website and you look at everything they provide, and it doesn't matter the size of the institution, they've got it all. Oh, you're a small business? Oh, we do small business. We're focused on small business, but you happen to be a big business. Yep, we can do that too. Oh, you happen to want, consumer, we happen to do, that too. And this is an important element of strategy, is choosing what you don't do. So most banks and credit unions are competing on the broad area, and they're competing on differentiation, except they think their differentiation is relationships. We talk about that all the time on the show is when you talk to a banker, especially a community banker or credit union, what is it? It's our relationship. Well, newsflash, that's a bunch of BS. If everyone's competing on relationship, like we can't all be doing the same thing and be doing it differently. And so the bucket that the majority of financial institutions, the incumbents, have painted themselves in is this: I'm broad-based and I am competing on differentiation, when the reality is only the businesses that have the most scale can do that. And I'd say where the Chimes of the world and the Currents and the Capitals have chosen to focus is they've said, we're going on differentiated, whether they actually do it well enough or not, but we're doing it narrowly, at least to start.
So do you think that acts as a competition and makes it harder for the financial institutions? Because now I've got that many more competitors on that many more axes, so it causes me to, fight a war on so many fronts. Does that make it harder for me?
Well, but they've especially, call it again, out of the top 10, maybe even the top 5 within, banking in the United States, you've picked the worst war possible anyway, is you haven't taken a full lay of the land in what you're competing with and what your assets are. I would say, those who are actually doing some of the best at it are the Chases and the B of A's and the cities, because they've said, oh, we're not going to compete on differentiation. We're going to take that cost leadership. We're going broad-based, but we're going to focus so much in our technology and our automation, everything from the self-serve and more of a model around interchangeable people. Still offer a friendly relationship, but really using the technology to be the heart of their relationship. Now, whether they pass that cost on to the customers or not, if you look at the prices, they're not. But if you look at their profitability, because that's, they've chosen that top left square, they're winning and cleaning up. And you can look at their customer growth and it shows it.
What you've described there is when your assets include scale and reach. So what happens if you don't? What happens if you're a medium-sized or community-based institution?
Well, this is where if you're trying to compete in the wrong square and you don't have the right resources, you're going to lose, right? That's the simple reality. Is whether it happens quickly or slowly, I think COVID has brought it forward. I don't mean to sound negative Nelly on this, but when I used to talk about 10 years from now, we're going to see a fraction of the financial institutions in the U.S. that we see today. That number somewhere north of 10,000. We're going to be into, some of the big players, a whole bunch of fintech startups, a whole bunch of players who don't even call themselves banks, the Apples, the Amazons, the Googles that are providing banking services. But we're going to see a lot of those smaller organizations go away. I think that's been brought forward. That's maybe, as early as 3, more likely 5, that we're going to see a number of those players begin to evaporate.
Well, that would make us look like most every other country in the world, right? That's one of the unique things about the United States is the number of financial institutions that we've had and the, disjointed, fragmented, decentralized banking system and regulation scheme that we've had in this country have encouraged that. And there are a number of good things about that. I'm all for community-based organizations. I think being small and local is great. It's not sufficient, though, right? That
Not
alone,
sufficient.
right?
Well, this goes back to focus, right? If you say narrow-based, so you're at the lower part, you either say, hey, I'm going to pick a segment that I can compete against the big banks on cost because I have focused and fully automated that piece of it. So think the who does a phenomenal job there. Rocket Mortgage does a phenomenal job of being focused, competing on their cost of underwriting and aggregation. A whole host of focused businesses like that. Student lending was like that before the implosion of that part of the business. But if I were a subscale business, and by subscale, I mean I'm not one of the biggest in the space. That's not meant to be disparaging. So that includes startups that don't have infinite capital that need to build a business, or community-based banks and credit unions. And that actually goes up to the regionals. The easiest way to figure out differentiation is to focus. not to try and be all things to all people. And it also means playing offense. How often do we talk about the fast follower fallacy? And there is no fast follower in strategy, unless you happen to have the exact same customers, the exact same competitive advantage, and trying to compete on all of the same set of things.
I mean, it's so ironic because at the top of the kind of strategic mind in the boardrooms for these smaller institutions, they're not wrong when they say we're going to win by focusing on our customers. They're not wrong by saying the unique asset that we have is this particular set of customers in this market and the way that we can relate to them. But yet, as you say, and I've said a lot before, and we joke around a lot, it isn't just something so generic as service or relationship. You really have to go deeper than that. And I think that plays into one of the themes that we're going to talk about over the coming shows is you and I also, I think, like the axis of offense versus defense. And so we're at the time of year where boards and senior leadership teams are getting together and they're thinking about, they've got limited resources. How do they deploy them in the most efficient and effective way to compete over the next year or so? And it really has to include both offense and defense. So let's come back to offense because I think that's such a big topic. But where do organizations need to play defense? How should they be allocating their budget in the coming months here?
Well, you made a really important point about you have to figure out how to do both, right? Defense might win games when you're talking about, Ditka and, football. But the reality is defense is only prolonging the slide into obscurity for
the Bears still scored touchdowns.
Yeah. Well, yeah, you have to put some points on the board. But when we think about where to allocate on your defensive measures, I think it needs to come to your data capabilities. And that includes foundational investments in how do we make data available and how do we create APIs to plug into it so that you can differentiate over the long term. Now, rip and replace as it relates to your core, no one's going to sign up to that, but you still need to figure out a way to, take some of this and say, we need to figure out how to make data available and we need to be able to integrate into people outside of our core providers. And we need to figure it out now. And I'd say the other foundational investment is not one technologically, it's a cultural one, which we need to get over this risk aversion of doing new things. I think in 2021, one of the things that will be telling is if your institution is not figuring out how to take action, no more committee meetings, no more, we're just going to go attend an event and, meet with the startups and feel good about it and give ourselves a, good job, cheerio. I think that is what's going to be telling in 2021, that if you haven't started, bringing it back to say race training, if you actually haven't gotten on the track and taken some laps as opposed to, downloading the runner's guide and, looking at the 5K plan and buying a set of shoes and not actually going out and building those muscles. I think that's...
Yeah, I don't need you criticizing my exercise routine because I've downloaded all of the apps and bought the shoes. And what do you mean that's not enough?
But it's going to be telling because those who are doing it are starting to develop those muscles and a big amount of competitive advantage that they're going to deploy. And so it's all about data and this culture of execution / avoiding falling into the trap of we can't do that because of risk. COVID proved we can do a lot of things we said we weren't capable of.
Yeah, in the long run, do you think we look back on COVID and we'll be glad these days are over? But is there a silver lining in that this did cause a lot of kind of laggard organizations to force to move away from the brick and mortar servicing?
Well, not even the laggards, even those who are leading, like one of our members at Alloy Labs. I love how Julie's board member said, never waste a good pandemic, or a good crisis to go get things done. So it's really broken up a lot of that scar tissue on, we can't do this, we can't do that. It sees that we need to say, we actually can do some of this. It's a good time to go back to first principles on who are our customers, what do we do for them uniquely? And based on that strategy, go figure out, to your next point is, where do we go play offense? What do we do that someone else can't do? either because they choose not to, or we have a unique relationship. And this is where the incumbents have an advantage is they do have existing customers that they can go tie these things into. And this is where the startups have an advantage, which is they don't have to worry about existing customers and having them dissatisfied because you're choosing not to do a set of activities that you did historically. But I think one of the most important pieces bringing these together, we're in strategic planning season right now. The board needs to say, we need right now to reassess what is our strategy given the new regime. And anyone looking for the quick guide on the ftforge.com, if you go to the blog, I did a quick summary of each of Porter's 5 forces and what it means for financial services right now. Reassess the strategy, but then set aside resources and set some goals around doing new things for 2021. Because if you're not executing on some of those things and you're just focused on bringing our digital agenda forward that was the former digital agenda, that's just defense and you're not going to win.
Well, you're kind of coming back to what you cited from Porter, which is one of my favorite concepts. And that's around the choices that you're making and the trade-offs, right? Because everything that you do is somewhat a function of all the things you decided not to do, right? The places you're not going to compete, the places you're not going to put emphasis on. What do you think? I know this is different for every institution, but, are there some high level things that organizations should stop doing or spend a lot less time on as they think about planning going forward?
As they think of planning going forward, I think they should spend a lot less time adding superlatives to their goals that say things like best in class mobile experience, best in class online banking, best in class lending, that they need to pick where are the places that it is totally okay to be sufficient, that you need to have a good online experience.
We joke about okayest in class.
Okayest in class, but by choosing not to overinvest in those areas, I can go pick areas that I can go in. And I think for a lot of financial institutions, that's eye-opening to begin to think about, but I thought we wanted to be the best. And we're not saying you shouldn't be the best, but you need to pick where are the areas that you can actually afford to be the bestest and where are the areas that you're going to be the okayest.
Yeah. And maybe even some areas where you're just not going to play at all. I've seen some institutions kind of give up on the consumer and focus on small business, and where they're providing consumer banking, it's more kind of a fill-in, and where they're being okay. And I think that can make sense, but it also, you've got to look at not only who's your customer base, but who's your prospect base. Where do you want to get the growth? And every now and then I run into a bank that's kind of they think they're being really clever by zigging while everyone else zags, and they're going to eschew all of the technology, and they're going to double down on the brick and mortar. And I think the problem with that is you're betting against the longer term trends, because you actually probably can build a pretty interesting business from that right now, or at least you could prior to February of this year. But how long is that going to last, and how are you going to grow that kind of business? So you've also got to kind of figure out, where's the growth going to come from?
Yeah, and I think when we hear two general trends that everyone thinks is highly differentiated in their strategy, it's either we're focused on small business or we're doing banking as a service. Well, newsflash, there are 40 plus banks doing banking as a service. You're a little late to the game if you think that's the highly differentiated. Yep, you can still get in. You can probably still build parts of a business there. And the other within small businesses, that's really just scratching the surface to really get into what are the unique pains, gains, and jobs to be done. You need to focus on various segments or psychographic aspects of it. Look at what Silicon Valley Bank built out of, focused on startups, lending to institutions that based on their cash flow and operating history should not be able to get loans, but semi-securing it through the relationships with their venture capitalists. Or look at some of the banks that have done an amazingly good job at focused on franchising and lending to franchisees. Yeah, those are the types of either segmentations or the psychographics around SMB that I think we need to see greater focus on. And there are some banks doing some pretty interesting things, especially looking at the gig economy and some of the needs they have that are different than your typical SMB.
Well, what about on the startup side, Jason? You spend a lot of time looking at and investing in some of these companies. If you were working on a startup on Fintech now, what would you think about your strategy and your budget and planning cycle?
I was just having this conversation with one of the leading fintech venture capital firms, and because of the amount of partnership the Alloy Labs members do, we have great relationships with these VCs because they want to bring us to startups. We want to see their cutting edge startups, how we could deploy them. And the trend that we would point to, and there's a future show coming up on this with Adam Carson from Point 72 that we agreed to, is there was this realization, shortly after, you call it the time between Perk Street, Simple, Movin' were founded in 2008 to 2009, that everyone ran into the online only, digital first, then mobile first approach. And that's really where that trend has gone for a long time as it relates to the banking side of the house and competing, with the banks and credit unions there. If I were to pick, I would say, well, there's already a bunch of competitors going after now. How do we provide better infrastructure to the incumbents? I would say the next leap, if I were to be starting something new, is to focus on this third wave around how do I either fundamentally rethink infrastructure or how do I move towards embedded finance? And we have another show coming up, I think in early October, we'll have the folks from Move on, Move, M-O-O-V, which is taking an open source type approach to embedded finance that I think, those are the bets that if you're early stage and starting something new, it's not just about the digital lipstick on the analog pig, we're going to make it prettier, but fundamentally rethinking what the business model could be and the delivery. And that's where it's going to get really interesting in this next wave.
Well, and so let's talk about the intersection of both of those worlds, the proverbial financial institution fintech partnership. There's been so much talk and some action, but way more talk around this. And, I know you and I were, both fans of Finovate. In fact, you and I met at a Finovate many years ago, and I love going to Finovate. But, as you like to say, I steal this one from you all the time. It's the fintech petting zoo. If you're not there with the strategy, going there and seeing a bunch of fintechs is one thing. But how should organizations plan for contact and collaboration with startups?
First, given that Finovate is all digital this year, there is no excuse that not just one, but several people within a bank shouldn't be attending, now that it's all virtual. And oh, by the way, they put these things up on YouTube, and Greg has gone back and done great interviews about the progress they've made. The petting zoo is freely open. However, if you want to do something meaningful with it, you need to figure out the problem you're solving before you show up. The one I like to steal from you, it's like going grocery shopping when you're hungry.
Right.
Let me go show up and be like, oh, we need a blockchain and a voice first and an AI. And because these are the ones that we've seen, we've got to go bundle those in. I won't call the chief digital innovation officer out on this one, but he told me that his least favorite thing is after his CEO has gone to a conference and just hands him a bunch of cards and says, we need to talk to these people. And he goes, and I have no context. What problem are they solving? And is this something we really want to implement? Are we exploring? Where does it actually fit? And I think that is one of the things that we're really seeing resonate with the Alloy Labs members, that are many of which are leading community banking institutions, is this, we need to also figure out in advance, where are we ready to commit today? Where do we want to begin to just dabble, right? And that's a spectrum of, we're learning about some things and might get there. Then there's we might place a few small bets on partnerships. And then there are things we know we need to do today. And those could be the defensive things like, hey, we need to fix digital onboarding. That has been proven to us. Or we need a better online lending process. Or further up the chain is, maybe we need to really start figuring out how we mine the data that we already have with our customers, because if we don't, someone else will figure that out.
Well, and maybe before we wrap this up and get started with Strategy Month here, what about that next step? Okay, fine. I know what problems I'm going to solve. I've got an easy way to see a bunch of fintechs here. How can I move faster, and how do I work that into my budgeting and planning season?
Well, I think the first thing is to actually set aside some budget for experimentation, and also set board goals around, here are the things we want to go explore and experiment. And success should actually be measured, not that you did all of them and they were all successful, because that actually just says you didn't set a very good goal. And you really need is to be able to have the question, not just strategically, what did we choose not to do, but what did we do and we decided it wasn't a good idea? And that better be batting about 500, maybe 600, that you say, hey, we went to go explore these new things, and here's what we learned that we don't want to be in the midst of. And so we're going this direction instead.
Yeah, sometimes I wrote about that in a blog post recently too. Part of the value of experimentation is not only learning faster in the things you're going to do, but learning the things that you're going to kill. And if you scuttle a $10 million project, which we saw not too long ago, because they spent a few $1,000s over a couple of months, that's a pretty good win.
Well, and this is one of the most important takeaways. I'll tie it back to the lies that leaders tell themselves about disruption, but that belief that in the face of uncertainty, it's riskier to act than not to act. What you're really doing, and again, one of our bank's board members had called this out, that the aha moment is, if we're not actually doing some of these experiments, exploring either partnerships, new products, ways we can differentiate and do things differently, we're really just creating a backlog of catastrophic risks. That those are actually very small dollar failures, and none of them alone are going to sink the organization. But if we're not doing them, the backlog of change in the industry that we have not prepared for, both the muscle and the fact that the market has moved, that actually, from a safety and soundness of the institution, is as important as making sure, that your loan loss reserves are in place and that your underwriting is shored up. It has to be on par with that in these days.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.